Hello guys, welcome back. Bit of a different video today. We're going to talk about car finance options. We're going to talk through the different options available and which one is the best for you and which ones are just a plain rip-off. So keep watching and we'll go through everything in just a moment. Okay, just before we get started guys, please just take 2 minutes to give me a quick thumbs up below. So give me a like, and if you haven't already subscribed, please do so. I'm going to be changing the channel a bit. We're going to do lots and lots more car content. So if you're interested in your cars, please subscribe, and we'll be uploading regularly. Okay, so in terms of finance options, the most common ones would be PCH, which is also known as leasing or personal contract hire. So I do a lot of videos on leasing. I'll put a link up in the top right corner of the screen. It's a great way to get into a new car for a fairly small amount of money. You don't own the vehicle, you give it back at the end of the lease term. It's very similar to hiring a car on a long-term period. Then you've got PCP, which looks very similar to leasing on the face of things. This is probably the most popular one in the UK at the moment. With a PCP, you pay a reasonable deposit, usually more than you would pay on a lease. You then pay your monthly payments, and then at the end of it there's a balloon payment to pay if you want to keep the car, and the balloon payment is usually pretty substantial. There's quite a lot of money, so the dealership is obviously hoping that you don't decide to keep the car. They offer you like money off a deposit on a new one, and on it goes again. We'll come on to that in a lot more detail. The other one's hire purchase, or HP. Again, a fairly common way of buying a car. The difference between hire purchase and PCP is with hire purchase, at the end of the agreement, you own the car. There's no balloon payment. So usually you'll pay your deposit and then monthly payments, and they will be higher generally than a PCP because obviously you don't have that kind of balloon payment at the end. You're essentially buying the car every month. Then the other options are a personal loan, so whereby you go and get yourself a bank loan, you pay it back over a set period of time. Good thing with that is you own the car from day one. You've got a debt to the bank for a personal loan, but the car is yours, okay? And then finally there's a cash purchase. So we're going to look at each of those and sort of the pros and cons with each of them, and hopefully it helps you go into the car dealership better equipped to get yourself the right deal rather than the one that suits the car dealer. Okay, let's get started. Okay, so here we go. We're just going to take you through each of those options and explain the pros and cons of each one. So leasing, which is also known as personal contract hire or PCH, most people now call it car leasing. The pros of leasing are you've got very low deposit options, lower monthly payments generally. You get into a brand new car. You've got the option to factory order, so you can pick your colour, your spec if you want to put optional extras on it. You've got no road tax, and you don't own the car. Why is that a pro rather than a con? Well, it's both. You don't own the car, right? So you don't own a depreciating asset, which is what it is. A house is generally an appreciating asset because over the years the value goes up. A car, generally speaking, unless you've got an old Ferrari or Porsche that's the right one of the right age and some, certain classics and things like that, a car is generally a depreciating asset. So as it gets older, it becomes worth less. Not owning one of those is not a bad thing because you know the cost of it at the start rather than at the end. You could buy a car now, and in 3 years you try and sell it, and it's worth a lot less in 3 years than you expected. With a lease, you know everything up front. Okay. So they're the pros of leasing. So it's generally speaking, you can get a new car for sort of second-hand car money, albeit you've only got it for 2, 3, 4 years, however long your agreement. Okay, the cons of leasing: you don't ever own the car. And for some people that is a con. For me, it's not, because as I said, I don't really want to own a depreciating asset. If I want to own a second-hand car, I probably want one that I'm just going to run into the ground. Do I want to own a brand new car? Never ever. No, because it depreciates like mad in that first initial period. Okay, that's me personally. With a lease deal, the car must be serviced by a main dealer, so obviously that can be expensive.
Not always, but it's something to look into before you sign up to a lease deal. And then it must be returned in good condition. If you don't return it in good condition, the lease company or finance company will charge you a lot of money. So it's always worthwhile going around the car, getting a couple of smart repairs done if you've got any big kind of scratches or dents or anything like that, or you've curbed the alloys quite badly. They do have like a reasonable wear and tear guide, so very small marks and scratches and tiny little dents and things are not a problem, but if it's anything significant, you need to get it dealt with before it goes back, or you will pay through the nose for it. So PCP, what are the benefits of a PCP, which personal contract purchase? This is the most common one that people use to buy a car through either a new car through a dealership or a used car. It's generally got reasonable monthly payments, and you have the option of owning the car at the end of the agreement. Okay. What are the bad bits? It's usually a higher deposit than you would expect with a lease, for example. Not always, but usually. You'll only ever own the car at the end of the agreement if you pay the balloon payment. If you don't, you've just leased the car. Okay. So if you have no intention of paying the balloon payment at the end, you are leasing that car, albeit dressed up in a slightly different manner. So bear that in mind, because that's a big factor that we will look at the end. At the end, I'm going to do a comparison of all the options and show roughly what they would cost on a particular car. Again, it's got to be serviced by a main dealer. Again, you're going to have limited mileage. It'd be on like a 10,000 mile deal or something like that. Same as a lease would be. Not so easy to move to a different brand is an interesting one. Generally, once the main dealer has got you on a PCP, say you go and buy yourself a brand new BMW or Vauxhall or Ford or Audi, whatever it may be, they'll make it very difficult for you to move to something else afterwards, because they will offer you what appears to be a fantastic deal on going into another one, or we forget about deposit, or we're going to offer you $3,000 off the deposit if you swap to another one. Then believe what you will, I don't think they're always such great deals, but must be returned in good condition if obviously you don't give it back, so the same as a lease basically. And PCP tends to have a higher interest rate than if you were to get a loan or something. Not always the case on a new car. You'll sometimes see better deals on a new car because the car dealership has to sell a certain quota of vehicles, so they're going to make it as attractive for you to buy them as possible. The other thing is the car dealer has to sell a lot of the vehicles on finance because that's a target for them, because they earn a lot of money from the finance. Okay. Hire purchase. So hire purchase is where you pay a monthly amount, usually pay a deposit up front and then a monthly amount, but you own the car at the end of the agreement. So the one sort of pro of that is that you own the car at the end of the agreement, if you see that as a pro. On an older used car, that possibly is a pro. On a new car, it's probably not, in my opinion, but again, it's an opinion. It's usually a higher deposit, usually higher monthly payments, because you don't have that balloon payment at the end, so you're paying it as you go rather than paying a small amount and then a big lump. Again, tends to be higher interest rates than if you were to get a loan, and you own the car at the end of the agreement, which again might be a negative, might be a positive, depending on how you look at these things. Personal loan. So this is where you go and get yourself a bank loan and buy a car. The good thing about this, if again you see it as a positive, you own the car from day one. What that means is you've got complete flexibility with that car. So if you decide, actually, I don't like this after a month, you can go and sell it and get another one. It's difficult to do that with the other things. You would generally lose your deposit or lose a big chunk, or even if you lease one, you generally have to pay back something like 50% of the remaining payments. Where with a loan, you've got total flexibility. You can do what you want with it. You owe the bank, but you own the car. The bank doesn't own the car, you do. The bank just owns a little bit of you, essentially. You don't need a deposit. Obviously, it's better if you have got a deposit, because the smaller amount of money you put onto finance, the better, because you're paying interest on the bit you put onto finance. So if you buy a car for £10,000, you could, with a loan, just get a £10,000 loan and buy the car with it, but you're paying interest on the whole 10 grand. Obviously, if you've got a couple of grand up front, you only have to borrow 8 or something, you're paying back less interest. But you don't have to have a deposit, is the important point I was trying to get to really badly. And the interest rates tend to be lower than with a PCP deal or with finance. Not always, but usually. Okay. Cash. There you go. Give them cash. Drive away in the car. You can't so often negotiate discounts for cash anymore because the dealers want you to do finance, because that's all part of they've factored that into their numbers. The amount of money they're going to make from you from the finance and the add-ons and everything else they try and sell you, paint protection and whatnot. That's all factored in, and they're all targeted on that. So they don't actually like people going in and paying with cash anymore. Obviously, if you're buying an old thing for like 500 quid, then you might do all right with a bit of cash. But yeah, otherwise it's it's not something you can negotiate with generally anymore. It's not so attractive. However, you're not paying any interest on it, so that's great. Never ever use a mortgage, right? I have heard of cases of people doing this. Obviously, mortgage rates are really low at the moment, and if you spread the cost of your car over 25 years, and it doesn't look very much, does it? Oh, it's only an extra 100 quid a month. Whoa. Well, it's hideous. You're paying compound interest on that over 25 years. You're probably going to pay back 1.5 times the value of the car, or twice the value of the car. And when you finish paying for it, it's going to be say 25 years old or 20 years old, or I mean the car will be long gone, and you're paying for it years after you've had it. Again, unless you're buying a car that suddenly becomes some huge collector's item and shoots up in value, it's never ever a good idea. Okay, so don't do it. Okay, so we've got a couple of specific examples here. I'm losing my voice a bit today, so apologies. So we're looking at a new car, and then we go on and look at a used car. So this one I've just picked from the Audi website, and the finance option it gives you on the Audi website is a PCP. So I've used that one for the purposes of this example. So we're going to look at how much this car will cost you using different methods. So if you were to pay using cash, obviously £29,220 is the on the road price, so that's what it would cost you. No surprises there. So then a lease, obviously you don't own the car, but I'm putting a lease in there for a comparison because it's something which we'll see is quite important to point out. So the lease is £954 as the down payment, and then £318 a month. And the total cost of that initial agreement there is £12,000 and 84 pence. But at the end of that 3-year period, the car's gone. So then looked at an HP hire purchase. So this is where you pay the car off in one go, as it were, as opposed to having that balloon payment at the end. So a deposit of £2,845 and then £824 a month for 3 years. At the end of the 3 years, you own the car. So that works out costing you £32,500 altogether. Then we look at personal loan. If you were to get a personal loan instead of an HP, same deposit, 2,845. Obviously, if with a loan, you could just get the whole thing. You don't need a deposit. But just to make it like for like against that PCP deal that I found, I've used the same deposit. So the personal loan deposit's 2,845 and then 757 a month, which works out just a few pounds over 30 grand to get you in the car. So the personal loan is only cost you about 900 quid to spread the payments over 3 years. And then the PCP, looking at that 2,845 deposit and then £410 a month, and then the balloon payment at the end is 15,146. Now let's say you don't pay that balloon payment and you decide to go to another car. At that point, you've just leased a car for 3 years. Okay, at no point have you owned that car. Unless you pay that 15 grand, that final balloon payment, you don't own the car. Okay, so the car goes back. So look at that against the lease. The lease, you've paid 954 up front the PCP, you've paid 2845 up front. The monthly payment on the lease is 318. The monthly payment on the PCP is 410. So you're paying 92 quid a month more and nearly 2,000 quid more on the deposit. Altogether, the lease would have cost you just over 12 grand. The PCP's cost you almost 16. In both those scenarios, you've just borrowed a car for 3 years. At no point have you owned it. So that's very important to remember. If you've got no intention of paying the balloon payment at the end, a PCP is probably not for you. Okay. So on that PCP, what we have to remember is we've got that 15,500 final payment. That 15,500 is or 15,146 is probably going to have to be refinanced unless you've got that 15 grand in cash to pay down. If you want to own the car, you've got to refinance that. So that then becomes £447 a month over 36 months. So for the first 3 years on a brand new car, you're paying £410 a month after that deposit. For the second 3 years, you're paying £447 a month. You're also paying road tax, which you don't pay on a lease. You've also got MOTs. You've got your normal service and maintenance, which you would have anyway. But the second 3 years of ownership of the car are costing you more than the first 3 years. I'm sure for some people PCP works. For me, it never makes sense unless the dealership are doing a 0% or something. Sorry, I've got a drink. My voice is going. So for me, if you want to just be in a new car every 2 or 3 years, and that's the long and the short of it, if every time your PCP initial thing comes to an end and you don't pay a balloon payment, just lease one instead. Just lease one. If you want to own it, bank loan is the best way to go. It's far better than car finance. Okay. Obviously there it's quite a high monthly payment. I've done it over 3 years with quite a low deposit. If you were able to put a slightly higher deposit on it, maybe stretch it out a year, you know, it's going to work out probably quite a nice affordable option if you do want to own a car. And as I said, with a new car, it's a depreciating asset from the moment you take it away. With something like house, it's an appreciating asset. You want to own appreciating assets. You want to borrow or hire depreciating assets. Okay. Example 2, I've just looked at a completely random scenario of just a used car that's 15,000 quid to buy. Okay, obviously we can't lease this, it's a used car, and there's a lot to be said for buying a used car, particularly one that's only that's a couple of years old. It's probably done a lot of its depreciation by then. You've still got a relatively new car and you could get a lot of years from it. If you're buying a used car, you probably think about it as a long-term purchase, something you're going to own for quite a long period of time, and they make a lot of sense if you look at it that way. Keep it well maintained, keep it serviced, and you could get a lot of years of use from it. So cash, obviously 15,000. If we looked at an HP deal on it, for these numbers, I've gone to 2 websites. So I've gone to Admiral Finance for the HP and the PCP, and then I've just gone to some random loan comparison site for the bank loans. This is where my figures are coming from. So HP, £2,500 deposit and then £390 a month. Ends up costing you 16,500. So you're paying 1,500 quid for the finance. It's not terrible. And at the end of it, that's over 3 years. At the end of 3 years, you own that car. Bank loan is 364 a month, and the cost of the finance is only 617 quid, which is really good. If you think you can borrow 15 grand over 3 years for 600 quid, assuming you've got a decent credit score and all the rest of it. And obviously that's of today, a deal I've just randomly found on the internet. It's interest rates change, availability changes, what have you. Then on the PCP, 2,500 deposit, £268 a month, so it's a lower monthly payment, but then the final payment's 5 grand. If you then refinance that 5 grand by taking a loan over 3 years, that 5 grand costs you 5465. Total cost of ownership using the PCP 17,613. So the credit on the bank loan costs you 600 quid. The credit on the PCP costs you an extra 2,000 on top of it. Credit on the HP costs you 1,000 over the bank loan. So you've basically got cash, bank loan, HP, PCP. Okay, hope that makes sense. Can you see where I'm coming from with this? So in summary, if you just always want to be in a new car, get a lease. Simple as. You don't want to pay cash for it, even if you've got the cash, because you're going to pay, say you pay 30 grand for a car. After a year, it's worth 22 or something. After 3 years, it's probably worth 15, 16. Doesn't make sense, really. Leasing one, you've paid, you know the amount it's going to cost you for that period of time. It's going to cost you, on this example, I think it was 12 grand for 3 years. Okay, and then you've got complete freedom to go to something else. You haven't got to worry about trying to sell your car or part exchange it. You might find that you really want to change to a different brand, but they don't give you a very good part exchange on it, and the brand you're currently with are the only one that will give you a decent part exchange. It just means you don't have as many options, okay? Where if you lease it, you know what you're getting into at the start. You know how much it's going to cost you. There's no uncertainty, and at the end you're free to go anywhere and get anything. And if you're going for a used car, bank loan is the way to go. If you don't have the cash, it's cheaper. You own the car immediately. There's no finance against the car. A bank loan's against you. And that means you can sell the car whenever you want. You can do what you want with it. Where with HP or PCP, you might not be able to do that, or there might be penalties if you do that. Okay, so keep that in mind. And then with any kind of car finance, you should think about gap insurance, particularly with the newer cars. What gap insurance does is it acts as an insurance that sits between the amount of your finance and the amount you may receive from your insurance company in the event of the car being written off. So most insurance policies for the first year will give you a new car replacement. So say you've bought that Audi A3 and you write it off after 6 months, they just deliver you a new Audi A3. There's no payment and you have to go and buy something. Not every insurance policy does that, but a lot of them do. Say after 15 months, you write off that Audi A3, they're going to offer you a payment, okay? Let's say the payment is, because it will usually be the trade value of the car, or what they call market value. Market value doesn't always represent what you can actually pick one up for in the real world, a kind of book price, okay? Sometimes they're reasonable, sometimes they're not, or they seem unrealistic. But let's say, for example, the insurance company offered you £15,000, but you still owe the finance company £18,000. The gap insurance covers that gap. So you owe 18 here, you're going to get 15 here. The gap insurance pays the 3 grand that's missing. Okay. Otherwise, on like an HP or a PCP, you could be liable to pay that yourself. So it's worth looking into gap insurance. Again, I would suggest you don't buy it from a car dealer. I would suggest you shop around online and look at deals for it, and just weigh it up. Is the cost of the insurance worth it to you? Most important thing with these optional insurances, obviously you have to have car insurance, you have to have house insurance usually, but these optional insurances, think about, is it worth it to you? If the worst happened and you were left with a chunk of money to have to come up with, could you do it? Would it hurt you? Is the insurance premium reasonable, given the fact that it could kind of bail you out of trouble? So do think about gap insurance if you're looking at HP or PCP. And remember, I'm not an accountant, I'm not a financial advisor, I'm not an expert on this, I'm not a guru. I'm just somebody that's had lots of cars over the years. I understand a bit about finance, and how some of the dealerships work, and why PCP and HP are the most commonly used forms of finance in the UK. It's because they suit the finance companies and the car dealers. They don't necessarily suit us as the consumers. So just give all that some consideration, and when you go to look at a car, you know, go in armed with information, know what you're dealing with, know what's out there available for you. You can privately buy PCP finance, you can privately buy HP finance. Obviously you can get your private personal loan. So know the options before you go and sit in front of the dealer, because it's very tempting to just think, oh, it's only an extra 500 quid deposit and it's only 30 quid a month more, and you know, the guy's throwing in, adding extras at you that you don't want. You know, oh, you can have this paint protection that's worth 800 quid for free if you take out our finance. Just, you know, keep your sensible head on, deal with car finance with your head, and don't get carried away in front of a dealer. Okay.
Thanks a lot for watching, guys. As I said at the start of the video, I'm going to be doing lots more car content on this channel. The car content I've done so far seems to be the most popular. So I've got a series which is the best car leasing deals of the month. We do that once a month, and we look at sort of specific categories of car. Also going to be doing a used car series soon. And there'll be content on company cars, there'll be content on finance like this. So lots more car stuff. I may even do 1 or 2 car reviews if I get the opportunity at any point. So yeah, if you're into cars, please give us a subscribe. I'll also still be doing some stuff, general financial advice, and maybe a few business things along the way as well. So yeah, really hope to get a few more subscribers and keep spreading the word. More and more people are watching the videos now, which is great, but that doesn't happen unless people spread the word and unless the videos get likes. If YouTube don't see enough likes, they think you're putting out rubbish content, which maybe I am, but give me a like anyway, you know, throw me a bone. Alright, thanks a lot guys, see you next time.